Good evening, everyone. Um, we're going to take a look at today's action to see if we can find any actionable information going forward in the next few weeks and months as we approach the end of the summer and the beginning of the fall season in the US. All right, so of course, today's action was dominated by headlines of Greece. um, the last basically 2 weeks, we've had a lot of volatility enter the market because of the uncertainty of whether Greece would meet their um, debt payment deadline, whether they were going to continue to, make good on their debts or choose to default and perhaps be forced out of the Eurozone. All right. So we can actually take a look here at the Greek ETF. This is a 5-year chart monthly. And what's interesting to note actually that even amidst all of the uproar over what's going on in Greece, actually it is just coming down to the bottom of its trading range for the last 3 years or so on this chart. And actually what you can see is that we have what is known as a descending wedge pattern, that we're seeing a number of indecisive candles here which point to indecision. These candles are telling us that the market is at such a point where it can go either direction from here, but the risk reward is to the upside. The risk is to the upside. All right. That is what these candles are telling you here. When you see close significantly off of the lows, and this candle here confirming that there is a bid under the Greece market. So I would not, regardless of the outcome, I would not be betting or pressing further downside here in the Greek ETF. Right along with Greece, today let's talk about China. We've been also seeing a lot of headlines about the Chinese market, what is going on over there in terms of margin borrowing to buy stocks, very speculative activity. And again, what we can see here on a 5-year chart, in fact, let's just zoom out to 10 years and see what we have then. What I want to show you guys is that even in the midst of a lot of news coverage, you always need to look at technical levels, because technical levels will tell you the underlying story of the mass media news opportunities. Okay, so as you can see here, in 2007, the Chinese market went on a parabolic run from the mid from the high 20s all the way to a high of 73. So it basically quadrupled in 2007. Since then, we had in the second half of 2007, we had a correction back into the 20s, and since then, it has been meandering in sideways action, but making higher lows, making progressively higher lows. What this indicates is that this correction from 50 to 40 may actually be a buying opportunity, because what this has done is, on a monthly chart, it has brought the Chinese market back to test its existing uptrend. If and only if price consolidates around this area, this may be a very good opportunity to see prices rebound to the top of the range around 50. And if it then holds at 50, what we can probably expect is a test of this breakout level right here, that may see us moving on to test this high back in 2007 of 70. Okay, so just keep that in mind going forward. Now let's take a look at the S&P 500 today's action. Now again, it's always important to keep any day's price action in context of the wider trend, what's going on. All right, so what I have here is a 1 year chart up, zoomed out, so you can see all the relevant and significant levels on the S&P 500. So as you can see, basically we started the year at around this area, and we have not really done much since then. We're actually right back where we started. So for January, this opening candle here, we had a low of 204.18 and a high of 206.88, and today we closed at 204.53. So for the 6 months of 2015, we've basically gone nowhere. We came down to the bottom of the trading range in February. Every time we've had a dip of between 1 and 3%, that dip has been bought up. We tested the highs on 2 or 3 occasions, once, twice, 3 times, 4 times. And again, in the context of the longer term trend, we have been making higher lows. Now we're right back to the bottom of the trading range. So this is a very important reference point to see which way the market is going to go. Again, as investors or as traders, we should not have an interest in whether the market goes one way or another. What we need to do is to anticipate, have an opinion, but let the market show us which way is the direction of the trend. At this point, the trend, if the theme of 2015 continues, will be buy the dip at the bottom of the trading range. We are currently at the bottom of the trading range, and so risk reward favors some short-term consolidation at these levels and then a lift off back into the upper part of the trading range. All right, so things to be aware of though. We have tested the highs at least 3 or 4 times this year, and we have not been able to sustain a move beyond it. It has always brought us right back down to the bottom of the trading range. So if you're going to play the range, then that's perfectly fine. You wait and be patient until you get to the bottom of the range, anticipating, watching to see if there is significant buying pressure at the bottom of the range that tells you, okay, there is a bid under the market, it's safe to go ahead and begin to initiate positions, anticipating movement back into the top of the trading range. However, you must do that with care and caution, because this market really has no near-term catalyst to sustain upward trend for very much longer until or unless something more momentous comes along. Right now we are in a range bound market, which means you do not expect a lot of things like technical breakouts to have more than 2 or 3 days momentum. So do not be in a hurry to buy breakouts. Do not even be in a hurry to chase breakdowns to the downside, because every major dip thus far has been bought. What you want to do is, until further notice, you take what the market is giving you. We are range bound. So on days like this, the market was down close to 1.68% today, the S&P 500. You want to be looking with cash in hand for opportunities. If we do hold our ground here at the bottom of the trading range, You want to look for opportunities to be able to start deploying that cash in quality names. All right, so let's take a look at what the Dow Jones Industrial Average did today. The Dow has been showing a bit of relative strength compared to the Nasdaq and the S&P. What this tells us is that there has been a so-called flock to safety. Flock to safety meaning that the stocks that are lower beta, they do not move as much when the market goes up or when the market goes down. Those are the ones that institutional investors turn to when they are trying to position their portfolio in a defensive manner. So when they are trying to position in a defensive manner, you will see things like the Dow Jones Industrial Average outperform for a short period of time until the near-term volatility, the catalysts in the market that are causing volatility in the near term, work themselves out or go away, and you see an inflow or a rotation back into more growth, high growth names. All right, so again, the Dow this year tested the top of its trading range, similar to the S&P 500, and it is now at a very crucial reference point. So again, I would not advise retail traders to be caught up in the day-to-day volatility that the market has experienced, given the ongoing Greek debt crisis. What I would advise is that you keep cash in hand, waiting for the resolution of this trading range. Keep cash in hand, waiting for the resolution, one way or the other, of this Greek episode. Again, the market is going to be here after Greece. It was here before. There have been other issues. There have been other, episodes, other encounters that have caused the market to become jittery, investors to become fearful and worried of the outcome. But no one single event is going to, just totally unload things unless we have something along the lines of another September 11th. And even that is temporary. Okay, so again, keep cash on the sidelines looking for some quality names to go to when all of this is resolved. Let's take a look at the NASDAQ today. Now, the NASDAQ is composed of a lot of biotech and high growth companies. Usually, you find that the NASDAQ suffers more than the S&P 500 and the Dow Jones Industrial Average, merely because, in some sense, its components are more speculative. That does not mean that they are not good companies, but because of their sometimes higher valuations, they are the first to get sold when investors and traders get panicked or nervous. They are the first to get sold. So as you can see, the NASDAQ again leading to the downside, down 1.75%. So again, just a simple wrap up and some takeaways. We are at the bottom of the trading range for this year. This can either represent a superb buying opportunity, but we must wait to see how this range resolves. You can see here that we've been noticing daily hammers on this. Earlier this week, it had a daily hammer, but it was not confirmed the next day. So we do have some indecision as to which way we're going to go. Anticipate, have an opinion, but wait for further confirmation. Even if you miss the first 0.5% of the move, you have another 3 to 5% upside if you're just strictly playing the range of 2015 action. So don't be too much in a hurry. keep cash on the sidelines and go to quality names when the time is appropriate. Okay, guys? Thank you so much.